Okay, good evening, ladies and gentlemen. Clueless Say Trading again, Frank. So now we're going to continue with our analysis and forecast of what we can expect from the broader markets going forward. So this is the daily chart, and I'm going to take out all the drawings. I'm going to start off with the basic formation of the chart, the naked charts in front. And you have the E-minis here in front of you again. And just as a reminder, in order to translate these numbers into S&P 500, you simply add anywhere from 5 to 7 points on the minis and you arrive at the actual S&P number. So 2030 would be 2036 or so on the S&P and the SPX. So, just something that should be second nature to you. So this is a daily chart of what I'm seeing, and which is more relevant to us right now on the market. You have a high back last May at 2134. But let's focus on what is happening in front of us right now. Now, one of the things I've learned over the years, and that's probably why the strength in my forecasting comes through, and 23,000 members on StockTwits follow my charts, even though I don't have the time at this point to really post that much on it. And thank you all for your support in being with the Clueless 8 trading service, and for many more who will be coming along our way. One of the things I've learned is the simplicity of looking at charts, technical charts, okay? Without doing too much, it's just like in life. Sometimes, it's called analysis paralysis. We analyze things to death to the point that we don't act on it. Or if we act on it, we are still analyzing it so much, we're out of that trade and we don't really make what we should make. Now, this happens to a lot of us. It happens to me sometimes, even after all these years, but I tend to manage and maximize my forecast and my trading positions as much as I can. With many of you, what happens is there is so much analysis paralysis going on. There is so much waiting, quote unquote, for the perfect moment that you guys and girls, never act. And even when you do, you tend to get out of that trade because you're not understanding what's happening in the background, right? So start fixing it. The beauty about this business is, unlike any other business that's out there, that you can actually fix yourself in 24 hours. It takes one or two solid, huge trades to get you out of your funk, okay, or flunk, whatever, and out of your morose, depressive, like, oh my God, lost so much money type of thing, and get back on the horse. And I'm not just saying it. I've done it. I still do it with certain positions. So I know. It's the ultimate business in the world where you can basically fix your problems within a matter of hours. Now, it's not easy. Now, why is it not easy? As I've always talked about, behavioral game theory, it's all in the head. The point of maximum profits, where you will where your potential to make the maximum amount of money comes from a point of maximum fear or trepidation or doubt about your abilities. My job is not to manage your trades. My job is to show you a powerful roadmap and the possibilities what's in front of you so you can drive your own car and get to the destination much faster than most people out there. So I will keep on trying to do my best in sticking to that mission statement, right? Exactly. Now, and that's the purpose of these very tactical, analytical videocasts, because the old saying, a picture is worth 1,000 words. I could write some long-winded articles like many do out there, and they're very good too. I read them. But what does that really tell me? You're looking at things visually, and that's what matters most. Here's a daily chart of your E-minis again. And if this trader who's listening to this or an investor said, oh, I don't really track the E-minis, well, it's high time that you do, because I have said that for years now, that you need to follow the realities of the futures market because they control the forward markets that you are trading in. So here's a chart of the daily. We're going to look at the internals in a second, and I'm drawing this in front of you. And here is your bear with me. So here's your consolidation channel. Well, guess what happened? And I mentioned this on Friday too, okay? With the short positions. We're out of the consolidation channel right now, and we're resting here on the 34-day moving average. Now, is that really terrible? No. Is that really good? No. The bottom line is, get the drawing tool, that this 34-day moving average is starting to feel the pressure of these fat red candles, which are nothing but selling. Now, there are reasons behind it. I've talked about it. People who are, focused, read, the huge. We're going to show that chart too. The huge rise in the Japanese yen, strengthening of Japanese yen versus the U.S. dollar, caused some massive, large scale, multi hundreds of $1 million worth of margin calls on shorts who were shorting the Japanese yen thinking it was going to go lower against the US dollar after the Kuruda, that's the Bank of Japan governor decision, that he was going to do nothing. He was not going to go into negative rates. He was not going to put more QE in place, which I think overall going forward is good because keep on doing QE is not the panacea to the ills of the global economy. But they got caught short. They were short the yen, and the yen went the other way hard. So what happened? Massive margin calls that they are right now having to sell. Now, portfolios which just deal with currencies, you think they just have currencies? Hedge funds have other things called stocks. They might have Amazon, they have Apple, they have Priceline, they have this, that. And they get hit, so they sell other stuff to come up with the cash to pay the margin calls. So these two fat red blocks that you see were exactly that. Now, does this mean that it's all over? I don't think so. Because if you look at this, if you look at it very simplistically, you have a consolidation channel, and now we're out of the consolidation channel as of at least right now, real time, 10:19 or 10:18 on a rainy Sunday evening in New York, New Jersey. Okay, so what do I think might happen? Well, first we'll find support here at the 34-day moving average. There's no question about it. But then my opinion is that this pattern, and pattern symmetry is one of my key strengths of my service, as you know, and I've been right on that almost 90+% of the time when it comes to pattern symmetry analysis. I think we come down and test the 50-day moving average. This is a critical point. I think we hold it. And remember, anytime anything hits a major moving average or a major technical point, it always holds it. It's the second or third time when it can't hold it is when you go in heavy short or heavy long. Okay? But what happens with a lot of technicians out there in the media, they're like, oh my God, it's hitting the 50-day moving average. It's all over. No, right there, you're going to see people who shorted, like us, who took tactical shorts out there, are going to cover. And when you cover, you get a bounce. Now, it could be a dead cat bounce, meaning that this is a false bounce, and this is the left shoulder. This would be the right shoulder at around the 2080 level on the S&P. This would be that rounded head. In that case, it's very bearish. Because if we fail here, the neckline, which is at that 2020 level, is going to break down. And we're looking at the next support level, which you can see right here was the next congestion level, which is around 1970, 1980. Actually, there's another support level here at around 2000 that we have to take into account, which is more of a psychological level, in my opinion, because 2000 was like, oh, we broke 2000, all kind of good stuff, right? But you can see what's going on. Look at this massive, massive move all the way from last year. This is monstrous. This big dragon bullish formation. And something happened along the way back in the middle of early February, right there, when everyone just gave up on the market. And Clueless Say Trading did not. We did not. Okay? Go back and review the video cast. We were tactical buyers here. So what happened at the in the first part of February after the huge January sell-off was we made a big V-shaped move. People said, "Nah, that can happen." You know, you had the media. Not a single person in the media, and very few people in our community too. And forget about stock twits and other forums. They were so uber bearish it wasn't even funny. They said, "Nah, it can happen." And I showed the probability of this type of move that had occurred back in October of 2015, back here. Okay, same type of stuff, double bottom, dragon bullish, huge move, that it would occur, and it did. Now, I like to always put a disclaimer because I'm pretty straightforward that way. Like, did I know that this was going to do that in move all the way up here? No, I don't have a crystal ball. I have a crystal brain that works. So the bottom line is this something big happened here. It's called the breakout level. Okay, and that breakout level was around 1920. If you recall, we talked about 1920, like, oh, it's going to go past 1920. It can happen. It can, possibly happen, whatever. So is it possible that this breakout level gets retested again in the following coming month or two? Yes, it is possible. Why? Because it's done that before. Now, if you drop from here all the way down to 1920, that's a couple of thousand points, right? It's almost 2,000 points on the Dow. So it's going to feel like the Mayans have landed and it's it's just over and I'm going to hear about like, oh my Lord, this is it. This is the beginning of the next bear market. Now, when do I think that this 1920 might happen? In my opinion, this 1920 retest most probably will happen, in my opinion, humble opinion, right before the elections, around October, September, October timeframe. Remember, October is a positive month after you get that big hit by the middle of the month. And the election jitters, there's a lot of jitters out there, believe me, all right, can cause markets to do what they need to do. In the meantime, you have other support levels that we can test, bounce, do whatever. But this move down here and a possible break and a retest of 1800, and hopefully a retest that holds, is possible. But I think this one happens somewhere around September, October of this year. And it'd be a good thing if it happens. And it would be a great thing if we are in the right tactical direction on the short side, because you will make so much money that you will never imagine that you could ever make that much money. But in order to do that, you have to be tactical. You have to track every single Clueless 8 comment, chart, sign up for the advanced coaching sessions, which I keep on pushing because they're so important, so critical in understanding the broader picture. And I put one up this weekend where I spent 2 hours explaining the algorithmic high frequency trading charts that I put out there, the quad versions. Anyone interested, go ahead and send me the email. I'll send you the information and you go from there. Because without those, you cannot survive the tactical moves that happen on an intraday basis or even on a weekly basis in the markets. Think or swim is fantastic, but nothing beats the quad high frequency trading charts that I explained in my video cast over the weekend. And feel free to peruse it and review it for free. So, okay, so this is what I think is going to happen. Now, somebody might say, oh, you're really bearish and stuff. No, I'm not. I'm realistic. Because deep down, I'm a bull. You know why? Because I wake up every morning, at least for now, And I thank God for everything and everything that we have in this amazing country of ours, the United States of America. And that is the story of a bull market. That's not a story of a bear market. Your existence and your living, that the fact that you're breathing and walking and smelling and just eating and going to work and taking care of your families is the human bull market. Okay. So I am not a bear, but I am practical. And I can see, so I'm just showing you what might happen. Now let's get all this stuff out here. So that is happening, what's happening right now. Now, the more this gets pressured, you're going to start to see it turning down. And when you see it, if you see and it doesn't happen in one day, okay, this 34-day moving average crossing below, okay, and I've shown this before, that's the sign that we're going into a short-term bear market or intermediate-term bear market, whatever the case. You see the 34 coming down and the 50-day moving average moving like that. Ladies and gentlemen, at that point, you can swing a short for weeks and weeks and just keep on shorting every rally that comes along the way. All right? But we're not there yet. While I have another 4 minutes on this particular video cast, let me give you the real short-term picture. That's your hourly. So what are we seeing on the hourly here? We're seeing that we should get a major support level here at, again, the 2020 level right there. This 2028 translates into 2035 on the S&P 500. I've showed that on my tactical charts. Please take a few minutes. In fact, take a little bit more than a few minutes and go through all the charts that I post on the real-time Twitter feed, and you'll see exactly the same levels. So if you look at this pattern here, doesn't it look like this one's kind of hanging up in purgatory? I mean, it needs to fulfill its pattern down here. It's almost obligatory. And I think it's going to happen. I think it's going to happen this week. Once it gets there, you got a major volatility cluster here. So we could bounce up and have a volatility cluster here. And is it possible that we bounce up and then go back? If this is the head and shoulder, if this is the head, then this is the left shoulder. So the right shoulder again should be around that 2080, 2090 level on the S&P 500. Is it possible the volatility cluster goes like this and then resolves itself up here, but fails to break this zone of 2100 plus? Yes, it's very possible. So you got this pattern here, because pattern symmetry is critical. I don't care what people tell me, and I've heard it for years. Oh, it's not everything is different. It's not the same this time. Well, it's always the patterns are always the same because human behavior never changes. Look at yourself. I look at myself and I force myself to change my behavior as much as I can. Okay? Especially when it comes to this business, because we don't have a choice. We have to win. So change your behavior in order to win. So bottom line is that if this is the volatility cluster that lasted for a bunch of days, if not bunch of weeks, like a week, 10 days, well, why can't for a week, 10 days, the market move, sideways like that? And then get up here, try to attack the right shoulder again at this level. And if we fail, then we're back to the grind again. Or if we break out, then in that case, we should be seeing that 2110 level or 2115 that I showed in my previous charts. But remember, as a trader, as an investor, as a human being, you have to adapt. If you don't see the signals that are emanating from the markets and just stick to this dogmatic, no, we are going to go to 2115, whatever it takes, well, it doesn't work like that. Now, the thing you have to keep an eye, very close eye on, is this pattern going to turn into a waterfall dive or a mini waterfall dive, or is it going to cap itself at that 2028 level? So every single trade that we do going forward, you have to keep this in mind. And you know what? There'll always be selected stocks like the MDVN and the PRGN, which are going to generate huge profits. But I'm talking about the overall broader stocks that are traded daily, and keep things tight and close to your vest. Don't carry things that heavy overnight. Swing things on particular ideas. There's they'll go up and down, and then they'll get to where they want to.